Hi, Mel. I'm so confused. I don't even know what hour it is right here.
I know, it should be 5 something. Our friend Carter Braxton Worth tweeted out a chart saying that the 10-year yield could peter out at 2.15, possibly. Could that be, the solution to tech's woes?
Not exactly. I mean, really, there's a number of things at play here, Mel. We've been talking about it a lot for months here. We've seen high valuation names correcting for months and months, if not quarters, for the last year. And you think back to the Q1 of 2021, about a year ago, when rates started marching higher, and they were doing so on the anticipation of these vaccines working and us being basically, past the pandemic at this point. So right now, with the 10-year above 2%, I think it's doing it for all the wrong reasons. And if you go back to Q1 of 2021 also, tech stocks were having a really hard time, even the mega cap ones that aren't even perceived to be that sort of expensive. So to me, I don't think that the 10-year going sideways up at this 2% fixes a whole heck of a lot for the problems in technology. And the last thing I'll just say is that if today is the first day in almost 2 years that we had a 2 handle on that 10-year yield, what did they do right off the bat today? They came for Microsoft, they came for Apple, they came for Alphabet, and those are the last 3. Those saved the market a week and a half ago, and you better hope they can hang on right here, because the way Google has acted, or Alphabet, since it reported that better than expected results, filling in that whole gap, that's really problematic to me.
I was going to mention Alphabet because it's only got 1% left of that huge pop after earnings stand.
Yep.
So you think all these tech leaders obviously they fall, the market falls, but as you take a look at them, is there hope? I mean, at least on a technical basis, could you find some support here?
Well, Microsoft better hold 300 in the near term. It's going back to 280. And I guess the point why we're focused on these names is that these 3 stocks, they make up, $6-7 trillion in market cap, and they've held up very well relative to many other parts of the market. They are their own market, if you will, inside the S&P 500 and the NASDAQ 100. So listen, Mel, I just think we're kind of in a 1 step forward, 2 steps back sort of environment here. And until we get more clarity about just how quickly the Fed is going to be raising rates, because now there's talk of surprise hikes. And let me tell you something, going back in my career, when you have surprise hikes, that's usually a problem. That does not mean that you're going to be mitigating those things that you're hoping to fix with like one fell swoop. So I think the market, at least equity investors, would be very surprised by that. They wouldn't take too kindly. And the S&P and the NASDAQ would likely be testing their recent lows from January if that were the case.
And on the 10-year for the wrong reasons. Obviously, nobody wants inflation to be where it is, or having the Fed, having to hustle after it this way. But we do have, 4% unemployment, record job openings, corporate earnings are holding up okay, balance sheets across the economy look decent. So it's not as if we're kind of teetering on the edge in every respect.
Right. But Mike, what if we're like hiking right into a recession? We've had this artificially inflated economy for the last couple of years. The Fed has thrown trillions of dollars of monetary stimulus to it. The fiscal stimulus has obviously just kind of ended up a little bit. So to me, I just don't think that with a foundation for this economy is nearly as strong as people think right now. And if we were hiking too quickly and inflation were to abate quicker than people think, then all of a sudden we have a situation where we could be staring down the face of stagflation. And that's something that I think equity valuations would not take too kindly. So, okay, record this, record that. Okay. I mean, as far as I'm concerned, we're probably likely to see fewer buybacks, and that's obviously been supportive of the equity market too. So I don't know. I just think that there's a greater potential that the Fed got really turned around when they were a bit, I guess they should have been focused a little bit more on inflation. And then when they took the transitory thing off and they got really hawkish, I think they might have done that exact top.
All right. Dan, nice to see you.